Welcome to Ripple Edge, where I makes your sabres ICAS, where we cut through the noise and give you the real picture on XRP. Let's get into it. XRP just touched 150 for the first time in weeks and then immediately backed off. That single wick tells you everything about where this market stands right now, and most channels are going to miss what it actually means. We're not going to do that. If you want the real picture on XRP before everyone else gets it, hit subscribe right now. We don't do fluff here. Let's move. Here's what they won't say, that 150 touch wasn't a breakout. It wasn't even close. It was a test, and the market failed it. A wick means buyers push price to a level, and sellers immediately overwhelm them. The candle body never confirmed. The close never came. That distinction matters more than almost any analyst out there is giving it credit for right now. So let's break down what actually happened, why the chart is telling a harder story than the headlines, and what the real levels are that you need to be watching. First, the fundamental backdrop, because context is everything. On April 15th, the SEC quietly issued a statement declaring that non-custodial XRP Ledger platforms do not require broker-dealer registration. Read that again. That is a regulatory green light for an entire category of infrastructure that has been in legal gray territory for years. That's why that's not nothing. That's actually a significant unlock for builders and institutions who have been sitting on the sidelines waiting for exactly that kind of clarity. That news gave bulls the fuel to run this week's push toward one side and spread, and they cheer. Then layer in the Rakuten announcement. Roughly 44 million users can now hold and use XRP with access at over 5 million merchants. Real-world adoption isn't theoretical anymore. It's ticking up on the scoreboard in ways that actually count. Sentiment is shifting. The pieces are assembling. Nobody's going to argue that the fundamental picture isn't improving. But here's the edge. The chart doesn't care about headlines. And right now, the chart is telling a very specific story that bulls need to hear. The main resistance zone sits near 153. That level reflects a cluster of previous rejection points where buyers repeatedly tried and failed to push price through. Today's tap of 150 was XRP knocking on the door of that zone. The door did not open. Price pulled back to 149 and has been grinding there. That's not a launch pad. That's a waiting room. Now here's where it gets sharp, and this is the part that most people are skipping over entirely. Approximately 60% of XRP's circulating supply is held at an average cost basis of around 1.0 Think about what that means in real terms. There is an enormous cohort of holders who have been underwater for months, watching their positions bleed, and who are now barely at break-even or just barely in profit as price approaches 1,000 Every single tick toward that level is a wave of people making the rational decision to sell. Not because they're panicking, not because they've lost conviction, because the math tells them to. That supply overhang is not emotional, it's it's structural, and it is sitting directly in the path of any attempted breakout. That's the kind of data point that separates the informed from the noise followers. Let's talk about the chart edge, because there's one clear thing you need to anchor on. Pull up the daily chart on XRP right now and look at the $1.44 to 1 SS. Solar per GR Shastiwer Cross Data Workage Pure 24 to range as a single zone. Everything inside that range is contested territory. Price can move within it without confirming anything meaningful in either direction. The only signal that actually matters is what happens at the edges of that zone. Specifically, whether XRP can print a daily candle close above 150 on real expanding volume. Not a wick, not an intraday spike. A full candle body close with volume behind it. Until that happens, every move inside that zone is noise. If bulls actually deliver that close, the structure shifts fast. The 1.515 level becomes the next test, and if that gives way, the entire 1.4840 to 1.53 zone flips from resistance to support. After that, 171 and 183 are the next meaningful walls based on higher time frame pivot levels. That's the bull scenario. Is BMSOS Gasset A zero, a measured staircase built on confirmed closes, not a vertical rocket that leaves everyone chasing. A monthly close above $1.50 heading into the back half of Q2 would be a significant momentum confirmation after months of grinding lower. That kind of close would send a message to the institutional side of this market that the structure has changed. But let's run the other scenario cleanly because that's what a sharp investor actually does. If 1 to 50 keeps rejecting, the first real support level sits near 1.42, followed by 140 just below that. A failure to hold one tier, or one tier outsiders as sabor xiesta storage and opens the door back toward 122, and below that 1.11 becomes the next structural floor. Those are not panic numbers I'm throwing out. Those are levels with technical relevance, and you need to know them before the market tests them. The exercise exerting Here's what they won't say on the channels that are calling this a breakout. The same fundamentals that bulls are celebrating right now have been building for months, and price has still been grinding lower through most of it. Good fundamentals are necessary but not sufficient. The chart needs to confirm. Volume needs to confirm. And right now, neither of those things has happened yet. What has happened is this. XRP spot ETF inflows have recorded consecutive days of multi-million-dollar inflows. Institutional money is trickling back into this market. That matters. That's a signal that the smart money hasn't abandoned the thesis. But trickling in is not the same as flooding in. And until the volume shows up on a breakout candle, the institutional interest is positioning, not confirming. So here's the real play. You're watching 150 on the daily close. Not the wick, not the intraday print, the close. If it comes with volume, you're in a new structure and the targets above are live. If price continues to reject and rolls over, 142 and 140 are your first lines of defense. Know both scenarios. Don't get caught reacting when you could be prepared. The market punishes the unprepared and rewards the sharp. You now know the actual cost basis of the supply overhead. You know the exact levels that matter. You know what confirmation actually looks like versus what wishful thinking looks like. That's the edge you just got that most XRP holders don't have right now. That's and sad des tasmo avrians warrant thitas a festerby edge yakstats these nors. Stay sharp. Subscribe to Hui's most as say, and subscribe so you catch the next one before everyone else does.